Before we even start the video, I want to share something with you. When I make content based off of flashy lifestyle, big payouts, or anything like that, the views bang. And I could quite easily make 10 of those videos a week and do very, very well off YouTube. But that's not why I'm here. I make videos to help traders become profitable and actually make a living from trading. But when I make those type of videos, not many people watch it. So I guarantee 80% of you won't make it to the end of this video, but that's by design. This video is dedicated for those people who actually want to become profitable traders and actually want to learn the in-depth details of my strategy that actually allowed me to go from being inconsistent, unprofitable, and unconfident as a trader to extremely confident and highly profitable on a consistent and regular basis. So with that being said, in today's video, I'm going to be talking to you about my multi-time frame analysis strategy that allows me to have extreme confidence and build a 3D model of price action before I even enter a trade. Now, as I said, this system is exactly what I use to become a profitable trader, and this gives me a massive edge on the market that most traders are simply missing. So if you haven't already, subscribe to the channel and drop a like, and get your notepad out because this video is going to be full of information and you need to take it in. So jumping straight onto the charts here, I want to just quickly highlight with you the importance of multi-time frames. So we're going to start off from the bat with our time frame hierarchy. Now, what do I mean by that? Well, our time frame hierarchy is essentially this. As you progress up in the time frames, each individual confirmation gets stronger. So you might have a 5-minute closure, and that is technically a confirmation, but it is no way near as strong as a 1-hour confirmation or a 4-hour confirmation. But as you can see right here, I've drawn out what the 5-minute looks like, the 15-minute looks like, the 30-minute looks like, and the 1-hour looks like on the exact same pair. And this illustrates to you how timeframes and price action are completely fractal. Now, what the hell does that mean? Well, essentially what it means is for every single movement in price, you're seeing the same patterns repeat on the lower time frames, on the higher time frames, and on the macro time frames. And this allows us to spot patterns and actually get entries on lower time frames using higher time frame price action. And this is how I've been able to follow the higher time frame trend and dial in my entries to get absolute sniper entries with tight stop losses, whilst also following that higher time frame direction. So first of all, we're going to start with top-down analysis, and I'm sure you guys have seen this, and I do have other videos on top-down analysis, so I'm going to briefly run through it just so that we can actually move on to the topic of the video. So obviously, as you know, we're going to use every single time frame all the way from the monthly all the way down to the 5-minute, and I'm going to categorize these time frames for you right now. So you have up here the monthly time frame, like I said, to the 5-minute. Now, from the monthly to the daily, this is your higher time frame narrative. So this is almost what you call your macro narrative. And what do I mean by a narrative? Well, a narrative is just the story that price is telling you based on economic conditions, based on market sentiment, all of these type of things, but it's the overall direction that price is looking to travel. So as you can see on gold right now, we're looking at the 4-hour here. You have a very, very strong push to the upside and a consistently trending bullish market like this. Now, what do we know about trends? They continue. So that's all we need to know about this. The daily, 4-hour, monthly, all of that sort of thing is trending bullish on gold. So now we dial it in, but we're looking with a bullish sentiment. And then we're going to drop all the way down to the 1-hour time frame. And essentially what that does is it gives us actually an opportunity to draw out our levels. Now, why do we use the 1 hour to draw our levels? First of all, it's a highly strong time frame, okay? The 1 hour is a strong confluence, and when you get a close, it's a very, very strong decision maker. But we also are able to get quite a high frequency of candle closures throughout the day. Obviously, there's 24 hours in a day. You get 24 1-hour closures and opens, which is very, very good because you are allowing yourself a lot of opportunity for trades. Whereas if you use something like a 4-hour, you're eventually only getting 6 candle closures per day, which is much less opportunity to be able to actually get a trade. Now, this is great if you want to take a trade on the 1-hour time frame, but what if you want to take a trade on the 30-minute? Or what if you want to take a trade on the 15-minute? What do you do then? Well, this is where we bring in my concept of refining your levels. So refining your levels essentially means adjusting your levels to the time frame that you actually want to take the trade on. This is how I'm able to take trades on the 1 hour, on the 30-minute, on the 15, and even the 5-minute, whilst using the exact same principles as well as having the exact same confidence. And I'm going to show you exactly how I make sure that all the timeframes align later on in the video. So make sure you stick around for that because that's the most important part. But now that we've got our 1-hour levels, let's say that, for example, the time right now, let's say it's 10 past 5. Okay, so we want to take a position, it's 10 past 5, but the 1 hour time frame isn't going to close for another 50 minutes. So what do? Well, we know that the next time frame is the 15-minute closure. So what if we were getting a position like this, where the 15-minute has decided to close above? Can we take a position based off of these levels here? Well, the answer is going to be no, because this is our 1 hour level. If we were looking to take a 15-minute time frame trade, we would need to essentially go back and analyze where the rejection areas are on the 15-minute. So as you can see, we have a level here and a level here where we're rejecting. So all we would have to do is simply refine that level and push it up towards this 15-minute area. And now, if the 15-minute candle did decide to push and close above here, guess what? You have clean range up towards the next range on the 15-minute. We can take buys and continue. But if it closes below, then guess what? We can't take anything. And the same applies with every time frame. If we're looking to take a 30-minute time frame trade, we'd have to do the same thing. As you can see, the 30-minute level over here is extremely valid, so we'd use that one. But this is essentially how you can adjust your levels. Now, it's okay thinking like this and thinking, okay, cool, we can trade on the 15-minute if we just move our levels up. That's great. And yes, you can do that, and you're going to get a lot more entries, which is fine. But you do need to be thinking about how all of the timeframes are aligning in order to actually make your positions so secure. And that brings us on to the next section of this video, which is timeframe alignment. So timeframe alignment essentially gives you the confluence that you need to be absolutely secure and certain in your trade and take that position riding it with the market. Now, the way that we do this is by combining the 4 hour, the 1 hour, the 5 minute, the 15-minute, every single time frame. So you might be thinking, shit, I have to look at all these time frames. Well, yeah, unfortunately you do. You have to be looking at literally every single time frame until they all align, and then you can take your position. So looking at this example here, we can quite clearly see that we have a level over here on the chart. Now, the 5 minute looks great. You've broke above the level and retested it. You're looking clean to continue up. Cool. You think, right, we can take a position. This is actually a sky dweller entry, one of the trades that I take on stream. Cool, take the buys, sure. 15-minute, also great. Look at that. We closed above, retested. Buys are looking good to continue up. And the 30-minute, look at that. We're also pumping above the level. Cool. But now you see the 1 hour, and look at what the previous 1 hour did that you haven't looked at with the lower time frames. Well, we actually closed below the level, and you've actually got no bottom wick on that 1 hour candle. So at any point, that 1 hour candle could just completely rip down and flip and stop you out. This is a prime example of when the timeframes are not aligning. The lower timeframes look great, but as we know, and very importantly in this case, the higher timeframe should always take precedent. Write that down. It's very important that you know the higher timeframe always takes precedent. Now you might be wondering, why does the higher time frame always take precedent? Think about it this way. If you have 10 daily candles, that means you have 40 15-minute candles. And that also means that you have 120 5-minute candles throughout this little middle section of the day. So which of those is going to hold a stronger confluence? Well, obviously the 10 1 hour candles, because each decision being made is a stronger confirmation when you have fewer candles. The 5-minute candle closure so often that these are not as strong as a confirmation because they're happening so often. The decisions are simply not as important. Whereas when you have the 1 hour, that direction now is so strong, and we've cemented a closure below the level and grabbed liquidity, that if this 1 hour was now to flip, you would essentially be in trouble. So you have to understand the higher time frame direction in order to actually capitalize on your position. So how do I take positions ensuring that every single time frame aligns and I'm not getting stopped out for unnecessary reasons? Well, first of all, like I said, we need to make sure that every time frame aligns. But I understand that this is not going to happen all of the time. So my main rule that I just told you is the higher time frame confirmations are the most important. So that means that I'm using the 4 hour direction as a key tool in order to actually give me direction and take positions on the market. Now, this is a perfect example of how the time frames are aligning right here. As you can see right now, the 4 hour candle is looking absolutely beautiful, pushing above the level. The previous 4 hour candle closed above as well. We dropped down to the 2 hour, same story. It closed above its level as well. And on the 1 hour too, we closed above the most important levels. As we can see right here, the 1 hour, the 2 hour, and the 4 hour, which is what I call the middle time frames, are completely aligned. And as well as that, the daily and the weekly and the monthly, which are our macro narrative candles, are also completely aligned. So for me, this is a perfect setup for an entry. We are absolutely printing right here. All we have to do right now is zoom down into the lower time frame to actually figure out what our entry is going to be. But as you can see, if you wanted to take buys right now, stops are going to be absolutely ginormous. So there's absolutely no way that I'm able to do that. So what we need to do is drop down to this lower time frame, the 5 minute, the 15 minute, or the 30 minute, in order to actually grab our entries. Now, if you don't already know how I take my entries, there are videos on my channel in the past that are going to show you exactly how to do that. But for the people that already know, I'm not going to waste the time right now and actually break that down, because The most important thing right now is understanding these multi-time frames. So what I've done right here is drop down to the 5 minute, and as you can see, even though there was no entry on the higher time frame, what we can actually do is take the exact same entry that you would have done on the higher time frame, whether it's a breakout, whether it's a flip, whether it's a sky dweller, anything like that, and you can essentially take that entry on the lower time frame and have the confidence to be in that position because we know the higher time frame is aligned. So as you can see right now, the 5 minute came down, and essentially all we've done right there is grab liquidity, broke that previous low, and respected this low here. So once that 5 minute candle flips, you're essentially very clean now to get into a position and ride this up towards the highs. And we're going with that higher time frame direction right there, but instead of using ginormous stops and taking a position up here, all we're doing is essentially waiting for that higher time frame. Even the 15 minute is aligned here. Once this breaks the highs, it's a very clean position and we can ride it up to the top of the range. Now, instead of being in a position with 70, 80 pip stops, we've actually got in the exact same position and followed the higher time frame structure, but we've dialed down into the 5 minute in order to do it with tighter stops and higher precision. If you took the 1 hour entry, your actual position, let's just compare the two. So your 5 minute entry, just pull this out to the side, was there. And if you took the 1 hour entry, which would have been after this closure, you would have had, firstly, your entry would have been a lot higher up. Secondly, your stops would have had to be absolutely ginormous. So now, instead of actually taking that massive risk and essentially getting a worse entry, all we've done right here is take the exact same entry, but dialed into the smaller time frames, which gives you tighter stops, better risk to reward, better entries, and essentially it's just an all-round better system. Now you can also use this principle to manage the position whilst you're in the trade, because if you enter a trade based off of a 1 hour confirmation, that's great, and normally you should be managing off the 1 hour. But what if you start to see 5 minute or even 1 minute structure that's going massively against your trade and you want to manage somehow? So if we were going to wait for the 1 hour closure, by the time that we actually been able to manage, most likely you would have been tapped break even, or something would have happened realistically and you're going to come out a little bit worse off. Whereas if you go to the 5 minute time frame, most likely what we would have done is we would have had our break-even point on the break of this 5 minute high to the left here, which is great. Now we're securing our profits here. And then guess what? We trail our stops with the lows. So every time you make a low, we're trailing our stops. You make a low here, good. You make a low here, good. You make a low here, and then eventually you take profit there, which is perfect. Or you let it run and you're understanding that essentially now you have clean structure. And if you do start to break below like this, that's when you can cut your position there instead of actually hitting break even like we would have seen if you would have held it. Now, one tip that I will give you, and this is very important, if you are zooming in to get your entries and you are zooming in to manage your trades, do not lose focus on what the higher time frame looks like. I've seen it so many times where people panic and maybe there's a 5 minute retracement and they close their trade, but then they zoom back out to the 1 hour after they've closed and they realize it was just a liquidity grab. It was just a bottom wick. So keep your eyes on the higher time frame and the lower time frame. You're going to have to be managing it all simultaneously, but this is your edge. And you're going to have to be able to master this in order to actually become a profitable trader. Now, the way that I would be managing off the 5 minute, again, just to go back to this, would essentially be based off of levels here. So you're going to do the exact same thing, even though you've got your 1 hour levels marked out. Let's say you've got your 1 hour levels, you know, as you did before, marked out on the charts. That's great, but what you can also do is, and what I like to do is use this little ray tool here, the blue ray tool, and use this to mark out your 5 minute levels. So now you know you've got a resistance here. Now you know you've also got a support right down here. So these are the things that are going to help you identify the smaller time frames. And then when you zoom back out to the 1 hour, you know, okay, cool, this is just a 5 minute level. Maybe we're going to tap back into that. Maybe we're going to, you know, run through and tap the 1 hour level. But these are all things that you have to keep an eye on and build that picture. It's all based on a picture being built up on a 3D structure. Now, what if all the time frames don't align? Now, realistically, I'm not taking a trade if most of the time frames don't align. Don't get me wrong, there's going to be times where maybe the 5 minute doesn't look good, but the 15, 30, and 1 hour looks great. Perfect. I'll jump in that position any day. But if the 1 hour looks bad or the 4 hour looks bad, but the 5 minute looks good, I'm not doing that. And that's all based off my time frame hierarchy. But if you get in a position then where you have every single time frame aligned, that is when you know, okay, I'm not going to size up like crazy, but I'm going to have full conviction in my position here. Maybe put a little bit more risk on the table. Now, if you want to go even more in depth with this, you can use the 1 minute for structure. Now, the 1 minute prints something I call microstructure. So microstructure is essentially the same thing as market structure, but on the 1 minute, right? It's super micro, it's super reactive, But as you can see, it's following levels to the T as well. So we can utilize that for entries rather than having to wait for higher time frame confirmations. So if you've got every single time frame aligned, and maybe you've got, a 1 hour area here that has been tapped before, and then price comes down and taps it, great. Guess what? That's your entry right there. As long as the 5 minute is bullish, which it is, the 15 minute looks good, and the 30 minute looks good. So as long as you've got all of those things aligned, that's when you can actually take those smaller time frame confluences. But if you're taking the smaller time frames and forgetting about the higher time frames, you're just asking for trouble. Utilizing multiple time frames like this is not only going to turn you into a better trader, but it's also going to give you an instinctive feeling on the market. You're going to start to notice patterns. You're going to start to notice structure. You're seeing it on the 1 minute, the 5 minute, and everything. And your intuition is going to start to play a massive part of your trading. Now, don't get me wrong, we always have to follow our setups, but I can see on the chart when the 1 minute is starting to print structure, and then I zoom out to the 5, and guess what? It looks like it's printing structure too. That's when you know you're ready to lock in, and that's when you're actually becoming a trader that can read the markets rather than just actually trade cookie cutter FVG or setups like that where you're just seeing something and then going, yes, this is a setup, buy. That's not how the market works. We have to be able to read it like a book. Every single word makes up a sentence. Every single sentence makes up a paragraph, and every single paragraph makes up a page, which then makes the chapters. That's exactly how the market works. This is all a top-down system. Now, mastering every single level of that system is the only way you're going to become profitable. You are not going to be able to do it just by mastering one bit. Just think about this. Would you be able to understand a book by reading just one sentence? No, you wouldn't. So I promise you, go and backtest this, go and implement it into your trading, and actually just watch candles print on every single time frame. Now, if this system gave you clarity, you can apply for my mentorship down below, and I'll help you build out a system just like this that works for you and for the way you specifically think. Now, it's for serious traders only. Please do not click the link if you're not serious. I'm taking on just a couple of people, and we're already changing lives as it is. We've already got people taking payouts, passing funded accounts, and all that sort of thing. So the link is in the description below, but it's only for serious traders looking to level up and actually become profitable. And otherwise, if you did enjoy the video, drop a like and subscribe, and I'll see you in the next one.